Of payment apps who received money from people through things like Venmo, maybe used PayPal. They're actually supposed to start receiving 1099-K forms if you received money that way last year, right now. But has there been a change in the process? Brandon Lewis verifies.
The IRS requires people to report all taxable income over $600 when filing their taxes, regardless of how they receive the money. And these days, a lot of people use payment apps like Venmo or PayPal to be paid for the goods or services they provide. Under a new rule, if someone earned more than $600 on a payment app, the app would send both the person and the IRS a 1099-K form reporting the income. But personal expenses, like a friend reimbursing you, are not included. This was an attempt to stop people from underreporting taxable income, but it left some app users confused over whether the transactions would cause them to receive a 1099-K form and what they'd have to report to the IRS. One viral tweet claims that the IRS has now delayed the requirement. So, let's verify. Did the IRS delay the $600 reporting rule for payment apps? Our sources are the IRS and PayPal. We can verify that, yes, the rule is delayed. On December 23rd, the IRS announced the delay, acknowledging taxpayer confusion, and added it wanted to, quote, provide more time for taxpayers to prepare and understand the new reporting requirements. Previously, payment apps would only send a 1099-K form to users who either earned more than $20,000 or made more than 200 transactions in a calendar year. On its website, PayPal notes some states have their own lower reporting threshold, so anyone meeting the requirements in those states will still receive a 1099-K form. With your Verify, I'm Brandon Lewis.